Let's welcome on board Shyam Srinivasan from a Federal Bank and talk about how their quarterly performance was. Shyam, good set of numbers as from what we can see. Tell us a little bit about how the second quarter overall looked.
Thank you. Yes, Q2 was a good quarter for the bank. All of us know that biggest test for a bank in very challenging times is the quality of the credit. And I'm quite pleased for many quarters, we've been quite consistent about the underwriting. And it's interesting and happy that in a time like this, it shows up as a good portfolio. Our slippages were at an all-time, not an all-time, was a low. And importantly, the recovery upgrades were higher than the slippages in this quarter. So actually we had a write back in provisions and there was no credit provision. Having said that, for the stressed book or the restructured book, we increased our standard asset provision. So we just prudently built up coverage over a period of time. Credit growth was modest. Deposit growth was excellent. Savings growth was excellent. Other income did very well. So I think many bricks that we've been laying over many quarters is beginning to hopefully show up in a good outcome. And the most satisfying part is in a challenging time, if you come out better than what many expect of us, it gives us confidence that we can sort of perform even better from here. So on balance, Q2 was a good platform to spring into growth. Hopefully India and the economy is on a trend up. So we think we can tap into that and start gaining share, which we've been doing consistently. And hopefully Q3 onwards, the trajectory and the momentum is strong.
Sure. Wanted to understand a little bit better about how the recoveries are shaping up and how they're likely to pan out going forward.
I would think the earliest signs of sort of a recovering economy are two things. One is how are existing clients servicing their dues, particularly on products that are extremely important to them, like a home loan and a vehicle loan. That's one measure. And the second is how is consumption playing through? Both of these are showing good signs, as in recovery, like I mentioned, was very strong for us this quarter, as also upgrades, which means people were clearing their dues and their accounts are becoming standard. And we saw good pickup in retail momentum, small business momentum picked up. So these are usually signs that there is optimism and activity happening in the economy. That said, it's not wide. There are pockets that are high contact centers, high contact businesses are still going through their own challenges. But I would say on balance, there is a positive trend. And as the Gati Shakti and other big developments start kicking in the country and the long-term infra kicks in, you would see even the corporate credit growing. And once that goes, that sets up a snowball of incremental growth across the chain. So we have to be a little watchful of how the next 2-3 quarters play out. But early signs of recovery are visible through better consumption, particularly in segments that are, what shall I say, the new age segments, and recovery upgrades have been strong. And you can see spends going up. Our debit card spends have picked up back to what it was pre-pandemic. So I would think the signs of a recovering, a healing economy is visible, and certainly with well over 100 crore people vaccinated at least one time, the worst fear probably is behind us.
Mr. Srinivasan, could you give us a sense of how that credit growth is likely to shape up? Do you anticipate that it will be significantly higher based on what you're saying is the uptick in the consumption economy?
Two things we should look at in credit growth. One is the aggregate credit growth, which still is in the 6-7% Y on Y. But if you disaggregate the credit growth and look at how some segments are growing, you are beginning to see pickup, say in retail, beginning to see pickup in small businesses, commercial banking. It's only the large ticket corporate credits that haven't picked up, but that is heavily led by corporates have access to money cheaper through other instruments. So it's not showing as credit growth. Second is that you will see as the investments cycle picks up, and which could be 2 quarters out, 3 quarters out, credit will come back to the early double digit, early teens, but that's probably 2-3 quarters away.
In terms of the other metrics that you're looking at, in terms of the targets that you have for the bank, how are you looking at the ROA as well as the ROE?
I think firstly, let me begin with digital. You've been probably watching our digital progress. I'm not talking of digital in the terms of number of transactions that are digital. That's now a given. It's well over 85%. But I think what is important is how we as a bank have chosen to work with, our mantra is digital at the fore, human at the core, and branch light, distribution heavy. So we chose fintech partnerships as a very meaningful part of our incremental growth. And we went out and created a superb technology architecture which enables fintechs to plug and play with us fast. So we have tied up with a couple of neobanks. We have arrangements with some of the best brokerage houses, credit card platform. So all of that are beginning to give us momentum on new business building. Like I mentioned in our investor call, well over 3 lakh accounts have been built on the neobank platforms. Of course, these are early days, only 90, 100 days since they started growing, but it is evident that that platform is working and customers are able to onboard themselves literally unaided. So the fintech journey of the bank is well and truly on, and certainly in passage of time, that will only get better. Capital, we are well capitalized. Thankfully, our credit quality holds well. We grew 10% Y on Y in the first half, and I would think the second half usually tends to be better. So it should get somewhere into the early teens, but we'll have to watch out how the next 2 quarters play out. But we are more optimistic about the opportunities ahead. Our platform is strong. Our fintech arrangements are robust and improving, and we'll keep investing into that.
All right. Thanks so much, Mr. Srinivasan, for taking the time. Wish you all the best in the coming months and quarters. We look forward to speaking to you really soon.